You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
It's a blessing in disguise, but I think it's good as well that you had that exit strategy plan, and sometimes it happens sooner than others, and then you kind of, it sounds like you ran with it and you made things happen, and that is awesome. So, you know, it was good that you were in a position where you were able to do that and it didn't really affect you and you didn't have to go look for another job somewhere else. So that is awesome. And hopefully people listening to this, that's the position that they can put themselves in so that they can leave within a certain time frame. How many flips, let's just go back to flipping a little bit. How many flips are you doing at once right now?
Right now I'm not doing, but like back in August, I was doing 4 flips at the same time in different locations. So I was in Goderich, Stratford, 2 in Stratford, 1 in Goderich, and 1 in St. Thomas, Ontario. It was a tough time, but we got it done.
So let's talk about that, right? Because obviously, you know, this is your business now. What processes or procedures have you been able to put in place? Like, give us some like meats, you know, in terms of like if somebody wanted to be flipping, like what are some of the things that you did that you're like, you guys should do this for sure. This is how I've, you know, built the processes and the systems in order to really scale. What do you think?
Oh, like there's a lot of them. So of course, having all your ducks in a row, right? Basically like having the private lenders already set up, having the speed, right? You have to have the speed on your table. Of course, just you got the property, you can actually get a mortgage on it and all that. But as well as I built as an engineer, right? I love procedures. I love to be able to like had stuff like all planned out. So I built standard operating procedures for myself. So everyone that I would like partner up with in terms of like doing the flips, they all follow the same structure, right? So we knew what would be next. And there's no wasted time, to the point that even with structuring how much we're going to spend and how much we're going to put into the property, it was at the end of the day, expenses were like on the $1,000 to $2,000 off to what I planned at the very beginning before we started the process. So it became a very structured process that we had in terms of like raising capital, like for the renovation. So if I say like it's $20,000 to do the renovation, we stick to that plan and keep everything into, of course, some couple things happen here and there. We have to adjust, but having those procedures that you can follow every single time that you're doing a flip and keeping those timelines very structured is what made me like succeed in every single one of them. If I'd say like it's 3 months, we have to be out of here. Like a month before, we had to have the house ready with a realtor inside taking pictures and getting ready to put on the market because it takes time to get sold and taken over, right? Closing. So those are some of the procedures that I built into my business to be able to every single time get people more interested in doing business with me too, because we always need people, right? Like us by ourselves cannot do much. You have to have your network of people that are willing to help, and then as well as being a good steward with the money that people are lending to you. That's one thing that I was always very adamant, making sure that people would be looking at me and saying like, yes, I want to lend to that guy again because he will get my money back. So building those things as an engineer for me was super important, and that's how all the properties were done.
Yeah, no, that's so important, having those ducks in a row, obviously having your private lenders, being able to purchase the home, having the financing, the plan. So really quick, what are, you know, if you can narrow it down to one of each, what's one thing that you always do on every single one of the flip properties, and what's one thing that you'll never do again in your flip property? So one of each that you say every single property, I have to do this, or this has to be done to make sure that we're going to move ahead. And what's one thing that, you know, maybe you made the mistake that you'll never do again?
So good question, because I had some couple of things that happened with me that would never happen again. One of them is one of the properties that I bought, and I was doing deals like on a weekly basis pretty much to get all those properties like under contract, right, and get it done. So one of them was, we got this property in St. Thomas, and I agreed verbally with a money partner that they were gonna help me out buying the property. And it got 3 days before the closing date. The guy called me saying, I don't have money. That will never happen.
Wait, so I'm just curious, like, how did it all pan out?
Interesting, because well, I'm an action taker, right? Like, I got that call and said, okay, no problem, you're not gonna get the money, you're out of the business, out of this deal. And I start calling my friends and families, of course, and then trying to raise that capital. The property was $180,000 purchase price, which is crazy for now, right? This was like last year. But I raised in 3 days, I raised $230,000 in 3 days. So that's the power of having your like people around you that know what you're doing. So put it out there, not even if you don't put on social media, but at least the people that are really like close to you, that really trust you. At that time I was, and I'm guilty of it, I'm not too much into social media. And I was not really like out there too much. I was really like focused on one thing and just build my business and getting it done. But everyone that's around me knew me from like good steward of the money, making sure that I'm always giving that money back. And I raised that money like super quick. So that's how it panned out, that we closed the deal. And we had actually 20 days after, I got a private lender that funded us at 80% LTV after getting the $230,000. So we actually could pay back those people that just helped us out at the very beginning. So at the end of the day, we raised like over $300,000 for that same property.
That's amazing. And I think that's the power of networking and, you know, having those conversations about what you're doing before you actually need people. Because if nobody knew what you were doing, you hadn't, you know, shared your success or your, you know, your experience, it would have been very, very hard to start from scratch with 3 days to go. And so I think that's the biggest thing that, you know, I'm hearing you say here is even before you need it, start cultivating those opportunities so that when you actually do need it, it's not going to look like you're desperate, but here's an opportunity for them to come in. If you don't mind me asking, like, you're obviously, it sounds like you're not JVing, but correct me if I'm wrong, that you're just essentially using other people's money to fund the deals for a percentage. Is that right?
Yeah. So I used to basically I had a business partner that we used to do, me and him, all the properties, and then pulling money from either partner, like basically private lenders as a certain percentage of the money, right? Not the deal. So yes, that was the case.
Can I ask, like, on average, like, what are you offering, if you don't mind sharing with us, just like a percentage, the points, like how are you structuring that? Just so somebody's, you know, that's looking to potentially borrow private money from somebody else, that they can understand like maybe a little bit of what that costs. Because I'll tell you, private money is more expensive than regular bank money, but there's different levels of, you know, expensive money.
Absolutely. Absolutely. I for me, it was not even the expense too much of the money. It was the speed that I was getting money, right? So when you're doing wholesale and really low cost, like for much more equity on the property, speed takes actually, it gets into the whole like thing. So for me, it was speed. So if in case I couldn't get money from a private lender, I would get with a friend of mine, I would partner with them, and we would structure in a certain way that we divide the business in 5 different steps. So getting money for like getting the deal, getting the money, down payment, renovations, and renovation money. So we divide that in 20. And then each one bringing each one of those boxes, right? So you get percentage per box that you get. So if I would do the renovations myself, I would get 20% of the deal. If I'm the deal, another 20%. So that's how we structured it. And people love the way we're doing it because it became super clear for everyone how much you bring to the deal is how much you're gonna get back on the sale of the property. So that's what we're doing if in case we're not pulling money from a private lender, or even if we're pulling money from the private lender, if they're getting the down payment, they get 20% of the deal right away, right there.
Can you break those down again? You said the deal.
So if you find a deal, it's 20%. If you bring the financing, is another 20% of the deal. If you bring the down payment for that financing, is another 20%. If you bring the renovation, is another 20%, and then renovation money is another 20%.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.